Everybody, morning. How's it going? Another day in the neighborhood, another day in the neighborhood. Would you be mine? Could you be mine? Won't you be my neighbor? And welcome back to the show, my savvy monsters of capital and trading, to the morning monster, the where I like my caffeine cold and my trading bold. Welcome back to the show. For years, we've been told a bedtime story, a beautiful green fairy tale about a magical future where every driveway has an electric car, the air is pristine, we breathe no pollution, we all hold hands, sing kumbaya with Mother Earth on Earth Day. And it's a lovely story, right? I mean, been sold to us by politicians who fly private jets and produce more pollution in a trip than most of us produce in our lifetime, and CEOs who saw the chance to slap a green sticker on cars and change the world with a $20,000 upcharge for the privilege of being virtuous. And that, my friends, is what we're going to talk about this morning. We're going to talk about the part of the story that was left out, the part where the fairy tale turns into a financial horror movie. We're talking about the great EV bloodbath, a cautionary tale of what happens when hype, government mandates, and a whole lot of wishful thinking collide with a little thing that we live in called the real world. And let me tell you, reality is hitting the auto industry like a freight train in the face. So let's talk numbers. And these aren't just numbers. They're Wall Street politely calling them face-melting losses. Between 2022 and the end of last year, major automakers, Ford, General Motors, Volkswagen, along with a few other plucky startups, managed to set fire to a staggering $114 billion in EV adventure losses. Let's put this in perspective for just 1 second here. For $114 billion, you could buy every single team in the NFL, the NBA, and Major League Baseball, and still have about $20 billion left over for fun. I mean, hey, it's you maybe buy a nice yacht with that extra $20 billion, right? After you already own all the sports ball teams. Instead, these companies used it to build a mountain of electric cars that are now, many of them, sitting on dealer lots, collecting dust and bird droppings. So what went wrong here? Well, it turns out that the magic ingredient for the EV fairy tale wasn't innovation. It was a $7,500 government check to incentivize people to buy it. For a while there, if you bought an EV, Uncle Sam would give you a nice little discount off the price, and surprise, surprise, people like discounts. People like discounts a lot. Sales in the third quarter of 2025, right before the tax credit expired, shot up. And the industry patted itself on the back. Congratulations, we're doing it, man. Making it. But then, September 30th, the music stopped, the tax credit expired. No more $7,500 credits. And what happened next? Absolutely predictable. Sales didn't just slow down, they completely, essentially stopped. Fell off a cliff for most of these traditional companies that have been selling EVs. A 46% drop in EV sales in a single quarter. 46%. Less cars sold in Q4. Whew. I mean, it's kind of like a Black Friday sale, but in reverse. People fled the showrooms like the cars were radioactive because without a government handout, the average Joe looked at that sticker price, an eye-watering $59,000 on average, and said, you know what? Maybe my 2012 Honda Civic still works okay. They remember things like, range anxiety, which is the modern day fear of being stranded on the highway because you can't find a working charger. They looked at the price of gas, which is suddenly kind of low compared to where it's been. Not, a few gallons of gas, not so bad compared to a car payment on a 60 grand car. And the automakers themselves, they're the bag holders. Very, very expensive bag that they're holding. And dealers too, I guess, if they actually took the cars. Now, in any good story, you have your heroes, you have your villains. In our case, we have the people who lost their shirts and the people who are quietly laughing all the way to the bank. In the lost their shirts category, we have legacy giants. We've got Ford, bless their hearts, reportedly losing $50,000 for every single EV they sell. They're basically paying you to take them at this point. Building something, buy low, sell high. They're building high and selling low. I mean, it's craziness, right? And it's not like they're worth, like, we're not willing to pay the extra $50,000. That's not like you can buy it and then sell it for more. I mean, they're dumping in money. It's basically a money pit, right? General Motors just took a $7 billion write-down loss on their EVs. It's a masterclass in how to burn a century of profits right here. And then Tesla, the golden child, the prom king of the EV world. Well, a little rough these days. Their sales are down a little bit. And they foolishly killed off the plan for an affordable $25,000 car, and it turns out that alienating half of your customers with a, let's call it a centric social media presence hasn't been that great for business. And a Yale study estimates that over the last year, it may have cost them 1 million sales. The stock still trades at a price to earnings of nearly 200. They've got some ambitious plans to roll into robotics instead of just EVs. While Ford and GM are still in single-digit price-to-earnings ratios. So, maybe something else going on with Tesla. But while those guys are all lighting money on fire, who's winning here? The quiet king of this corner is hybrids. You remember them, right? The boring, practical cars that nobody really wanted to talk about during the EV hype storm. Well, Toyota never forgot. They kept making reliable, efficient hybrids. Now they're dominating the market with a 58% share. They played the long game, and now it's paying off. Political environment changed and coming back to boost them up. Their stock symbol, by the way, TM. Just saying, might check it out. And the other big winner here, China. A company that you might not have heard of a few years ago, maybe you haven't heard of it, BYD, has actually sold more EVs worldwide than Tesla. And they're not just winning in China, they're flooding Europe with affordable EVs. They're aiming to sell over 1 million cars outside of China this year. It's kind of a geopolitical shift. Can the rest of the world even keep up? Their government sponsors and finances these things. So as an investor, where do we find the opportunity in this beautiful disaster? This is where it gets a little bit fun. See, first, the obvious play, the hybrid comeback. Well, Toyota Motors, they are the undisputed kings here. They're the I told you so of the auto world. You've got companies like Honda Motor Company, HMC. You've even got Ford, who is seeing massive growth in their hybrid sales. Ticker's F on Ford. The market is rewarding practicality, over fantasy. Now, another way to play, we always talk about picks and shovels type of ways. The EV dream isn't dead, per se. It's just going to go through a brutal but necessary reality check as those $7,500 checks no longer come in the mail or come off your tax bill. People will still buy EVs, especially as cheap models come to the market. But what does every EV need? They need a battery. Even hybrids need a battery. And this is where you can look at the supply chain technology. The technology is shifting to cheaper batteries. We've got LFP, LMR, and they don't need as much of this expensive rare earth stuff like cobalt and nickel. This could be a game changer for costs as far as batteries go. So keep an eye on big lithium producers. ALB has been on an absolute tear, working on a breakout. As the dust settles, the demand for raw materials is still going to be there. This is a classic gold rush type of strategy. So don't bet on the miners, bet on the guys selling the picks and shovels. And Tesla actually just opened a lithium refining facility. So they're getting in the game too. What does it tell you? And a third, although contrarian type bet here, are companies like GM and Ford possibly beaten down too much? Or do they have losses they haven't disclosed yet? I mean, it's risky, but these are industrial titans. They can work to stop the bleeding. And if it works, they can pivot back to trucks where they make a ton of money and hybrids that actually make the money and develop a sensible long-term strategy that may be sustainable as they get back into the EVs. So there could be massive upside. I mean, it's a classic bet on American comeback stories. We love comeback stories. And finally, keep an eye on the affordable EV space. The new Chevy Bolt, the Nissan Leaf, they're coming in around $30,000. If they can prove that there's a real market for EVs that don't require you to get a second mortgage and maybe a first child, maybe it could spark a real EV revolution as the range of these things expands and the battery technology keeps getting more mature. You know, we're not talking about the fake government subsidized EV revolution. We're talking about a real one. So the moral of the story here, the EV fairy tale, the bubble's kind of popped for now. The market waking up to a nasty hangover. The bill is coming due. The push for an all-electric future was just too much, too fast, too soon, driven by an ideology that just didn't have any common sense. The electric grid couldn't even handle charging all these EVs, let alone running the AI revolution we're staring down. So for savvy traders, the chaos is a ladder. While others are mourning their losses on hype stocks, we can look at boring, profitable companies that got it right. We can look at essential technology that's going to be another phase in this transition. Don't follow the headlines, follow the balance sheets, because in the end, the only players that can do it profitably are the only ones that really matter. So that's it for the monologue today. Be careful out there. It's been a rough run in EVs. It's just the reality of the situation. It's just a rough run. And is this cool? I have to figure out what's up. My charts are frozen. Before I flip that over. See if I can get it to unfreeze. There we go. And pop over here. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation here is intended to be informational, educational, fun, and entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you want personal financial advice, there's people you can hire for that. I'm just a dude here on the internet, does some trading, makes a little bit of money. Here's my year to date, 11 grand, 1 year, 63.5. And it's not even the full year. I actually started this account tax day last year, made $63,000. You might be like, well, how big of an account is it? Started with around 75 grand. I've put more money in. I've taken money out. The account's up to about 100. I think it's around 120,000 right now. These are the closed trades as they go. Where's the big drawdowns? They're in here. They're not big. Biggest one, $4,000. And I made that money back in about a week. Look at it right here. That was the $4,000 loss. Already back to new highs. So, consistency, trying to book a little bit of profit every single day. That's what I'm doing. And I just show it off. So, how do you make money in the market? Small, consistent trades. So, jumping into the charts, S&P here, coming down to potential support, maybe. Although that little bounce didn't go as high as we think, or high as I thought we might, so pushes the target just slightly lower. Could we be down there today? Already got a pretty good range going today. Down 60 points. That's a big day. NDX. Oh, that's cool. I don't know what the... All right, try that again. NDX. Pushing on down. Roadmap line, not far away. Down 400. That's a pretty good day right there. Now, for this whole thing to be finished up, let's just stop and talk about this for a second here. This little move, if this is the A wave down, this was the B wave retrace to a lower high here, and this is going to be the C wave, we need to finish this baby up. We need a low lower than that low right there. To do that, we start here, we start there, we come over here, and we look at the fib line that we just established. And that would be a potential right down here to the 1272. All the way down here. So we may not stop just at the daily. We may push on down here to about 23.3. Like that. Interesting. Check it out. Is that a 3-day? No, that's 3 days way on down. So it'd just be a healthy poke through the 1 day. If we go visit the weekly like we did back Liberation Day, that's going to be a healthy drop from here. So if you're thinking that the current correction is as bad as Liberation Day, not quite. Not even close yet. We're just chopping in the same range we've been in since back here in October. Maybe even September. So the market hadn't really gone anywhere as far as NASDAQ. Hadn't really gone anywhere as far as S&P. We're just sitting here paused. It would take a much bigger correction to be anything like Liberation Day. Liberation Day was actually a bigger drop than COVID. 100 points bigger, top to bottom, than COVID. A lot of people don't think about that. But that was a bigger crash in the market than COVID. But we barely even talk about it. Kind of funny that way. All right. S&P overnight. Let's take a look at in the 4 hour, we're already below it, pushing on down. So everything but the daily, that's the next support up down here. So that could very well be where we're going to retrace to. We'll take a look at toward the end of the show, we'll take a look at the gamma levels and try to predict where price might hang out today. In Q, definitely gunning for roadmap line on the futures, and we could be setting up for that bigger correction there. This move that size, so off of that high, pushes it down to at least 23.8 right there. And the QQQ levels, I know everybody's like, well, what about the Qs? How would you trade that? How would you figure it out? So if we go for, that's the first move down. This was the choppy, nasty correction. Came back up almost to the prior high. Now, if that's the first move down, the A is the retrace, the B, and we're actually going to do the C. First move down, retrace. Next move down, retrace. Final move down could push us right down in this 565, 566 area right down here. If we just get to the 1448, somewhere around 575. That would be a bit below the daily roadmap line. So be careful out there. And this, we could spark off, because of how long this is taken, we could spark off a correction. This took like 3 days here on this bounce. So this one could take a couple weeks as we grind the roadmap line and then do a final flush out. Russell, that's a cautionary pattern. Came back up, bounced off the bottom of that trend line, uptrend of lows, coming back down. If we bust through that, probably going to see more downside on Russell. So that's kind of the level to watch right there. Excuse me. Got a little gravel on it though. Same kind of thing. RUT is the actual index, and then IWM is the ETF that you could play if you're trying to play an ETF. Like ES has SPX and then has SPY. NQ has QQQ, and NDX is the index, and then Russell RTY has RUT as the index, and IWM is the ETF, if you're not familiar with those. Oil still sitting in here below the resistance, above the supports, and above this support, and just hanging with my homies. If we start breaking down below the roadmap line, probably going to test that. If we get below it, could finally do the final flush outs down in the low 50s, maybe in the high 40s. One big swift flush out would be really nice to see, and just kind of put the icing on this giant correction cake that we've had cooking for like 4 years. And we peaked out March 2022, back here at 130. We've been correcting the price of oil ever since. One nice little final flush out down in the $49 area would be beautiful to see. Could do that, and then rally back up to the 100 618 test. That's what I expect. Now this could take on out to July easily before this finally flushes down on oil. Gold, I've been warning about for a few days that we came up to that 618 zone, and as long as we held under it, that opened the door for another flush. First move down, retrace, next move down, classic A, B, C type price action. Puts the target down here in the 3,700 to 4,300 zone, basically. Anything lower than that initial low can complete the pattern. Ideally, we'd probably be in this 4,000 to 3,700 area right here. And if things got extra crispy spicy on the downside, we could push on down to like 3,500. That'd probably sufficiently bomb everybody out on gold right there. Going from $5,600 down to $3,500. I think some people be crying in their beer at that point. Silver also having a moment of clarity. in continuation. Did not even make it up to resistance. If we poke down below this low, probably coming on down here in the 50 zone. Maybe even going for that 1618, which is down around 40. Going from 120 to 40. Yikes. That would be like an $80 correction. Man, oh man, that would be rough. Right? I mean, that's the correction on that would be bigger than the prior all-time high for silver. I mean, that's just yikes. So be careful on that one. I've been warning that that play is played out for now and probably going down. If and when we make these blows down here for gold and silver, that can set up the next run. But right now, probably going on more correction. Just got too far, too fast, too high, and correcting it back out. Bitcoin breaking on down a little bit. Kind of confirming crypto winners here. I do expect the 70 zone to hold for now. If it doesn't, we're probably coming on down to 50. That's probably where the next support is. And that's going to be a... What would be interesting to me is if we just do the whole big 75% correction now, and we do it fast, instead of dragging this out to October. 70% correction. We could pull this all the way down in here. Look, pull it down in the 40, low, 30, 35 area. So if this correction goes as deep as typically for a crypto winter, we might only be halfway there. Could be another 50% downside from here to the bottom. And we don't have to get any bounces. Like, this could just flush on down, flush on out. Be rough for a lot of people. Really rough. So this could go fast. It doesn't have to drag out till October. The timeline that we usually do this, typical crypto winter, typically lasts about 12 months. That high was early October. This low, probably September, October. But the opportunity is there to finish this up faster. And I mean, we can always do a fast correction. So stay safe, beware, know where your levels are. Play small if you can add to it. So right now this drags the resistance level down too for the potential bounce. If we're going to bounce. Ideal level to 100,000. If we bounce from 70 up to 100, that's really going to suck people in. But then you have to watch out because we can still go down to that 30 to 50K zone down here. If we do materialize a bounce in the next couple months. Ethereum pushing on down. Might come all the way back down to this low we had back here in April of last year. Be cautious on that one. If we go for a crypto winter low, this could be all the way down in the triple digits, below 1,000. Be careful. It's in the chart. NKD, global liquidity taking a step back today. Not really indicating anything. Dollar. Ooh. Stepped across the line. That's a potential invalidation right there. Small overlaps are okay. If this gets a candle close up here, any more than that, probably not going to get continuation lower. This is probably going to reverse. That's probably going to put down pressure on gold, silver, oil, lower prices. Maybe even Bitcoin, Ethereum, other commodities. Dollar going higher puts down pressure on commodities. Be careful. Apple Still set to rally up to 295, but not, on a down day, things aren't going to buck the market, all right, in general. So be careful out there. 90% of stocks are going to go with the market. Market's down. Stuff's going down. Amazon, ooh, got earnings coming up. I guess they took a step back on Google. And Google taking a step back, coming back down into that zone. If we get any kind of continuation here, we could be down to the roadmap line. This could be enough retrace here. We kind of back tested that fib line. Set us up for the next fib line up. It's like 385, 385. So back testing this fib line right here. It's normal that we, come up, pop up, hit the fib line, retrace. That would be normal to see right there. Meta poked a little bit below. We're looking for that 618 to hold here, that low, this high. Want to hold in here, turn back higher, and get out of here. Now, NASDAQ and all that doesn't have to continue lower. Like, we could mount a reversal from here. Microsoft, hit the target. If this continues lower, next target down, 380. NVIDIA, hit the support. Hit the roadmap line again. We get below it, going down to 150. Tesla, finally in the roadmap line. Finally hit it in full. So we're starting to see all these at a point where they can all mount a reversal. Meta, Microsoft, NVIDIA maybe could go lower. Tesla, Google, Amazon, Apple, everything looks like it could go higher here. So they're all setting their charts up. Just be careful, betting short. Netflix. This almost looks like a fake out right here. We broke below, pushed a little lower, and then quick reversal. This might go shooting right up here. It's almost like, oh, I'm going for 60. Nope, just kidding. And it goes right back up here. So watch out for Netflix to get a rally going here. So stuff that was moving up in the pre-market, I put it on the gainers list. Stuff moving down in the pre-market, I put it on the decliners list. Hunt for some opportunities. And then we'll wrap up the show with my expectations and just trying to guess where price might go based on the gamma levels. So stick around for that part, right? If you want to see my expectations for the day. We're going to hunt for a few opportunities here. AppLovin, I'm not sure that's the bottom yet. Software is getting punched in the face. While it was on the top of the gainers list, I would be careful. Lumentum just keeps being a beast here. This is probably going to get a pullback. I'm a trend pullback continuation trader. There's no pullbacks in here. This is just trend. These little pauses don't really count as pullbacks for me. I need something more substantial. So be careful chasing that higher. ETHD goes up when Ethereum goes down. This could break through the roadmap line and go higher if Ethereum's going in the toilet. SMST. Ooh. 2x short on Mr. MicroStrategy right there. Let's go check out strategy. Is it down to the target? It is. Look at that beautiful drop right there. So we can hold this zone, and if we don't hold this zone, the next fib line down is in the 60s. And that's a 50% drop from here to here. 50%. If Bitcoin takes that 50% drop, this is probably getting crushed right here. Let's see, STRC. Kind of keeping an eye on this one. I might pick some of this up if we get below the 90 area down here. And this thing pays a crazy dividend. And they're already increasing it again on the next payout, $1.87. Whew. That's juicy. I guess that's a double dividend, right? Looks like. Guess you have to buy today if you want to get in on that. No, you have to buy next week. To buy next week. Gotta have it settled by Friday. Pays out at the end of the month. It's pretty spicy. BWXT coming on down on the roadmap line. May take a first move down, second move down. Could be on down a little further here. Probably be pull that target up just a little bit. If we get through the roadmap line, that'd be down in this area for the target. Just to illustrate this hood, that's what it looks like. First move down, retrace, next move down, PLTR. First move down, retrace, second move down, right to the target. So hood and Palantir in support zones, along with a lot of the Mag 7 stuff. Not too shabby. The McDonald's hit the target there. If you played that daily roadmap bounce, that's it. Don't really expect much more on this. My 370 target is a much larger bounce target, so be careful. If you're chasing after it with me, we could be riding this for a couple years before we get to 370. That's my plan. Keep collecting dividends. It's a nice little chunk. Yeah, $1.86 a share. It's a pretty good little chunk. Unity. What if maybe this list isn't the right list? Let's see. Is this the right list? Ah, it is not the right list. I was like, this has got to be yesterday's list. Kelly B. Align. Costco going for it. Target's up there. Hershey's. That hit the daily target. If you jumped on that one, congratulations. That worked out. It's all the way up here above it too. This can mount a bigger run here. 305 if it's gonna, and we're getting above that bigger 618 level. So 305 would be the upside target on this. This is a monthly chart bounce. Yeah, monthly chart bounce. Beautiful upside potential there, 305. TPR, Tapestry. Tapestry maker is called a tapiker. Somebody bet me years ago that I would never remember that a tapestry maker is called a tapiker. And it is stuck in my freaking brain ever since. AVGO down to the target. Spark a bounce. CAH. Man. Rock and roll while other stuff like Humana is getting beat down. AGCO breaking above the downtrend line. This can spark off a bigger rally. Let's see what else we got in here. Zoom. Already hit the target. Probably coming back to the roadmap line. Baba. Looks like we're going for a double bounce. Burn. I wouldn't bet on that being the low yet. 1, 2, 3. It's probably got another. So this, if this was the A wave, this was the B wave. This would be the 1, 2, 3, 4, and 5. So it's probably got more downside to go before we're done on burn. AGQ. I've been warning about that. It's back to the roadmap line. Silver keeps being soft. That's going on down. Lily keeps chopping in here, but has, if we can keep a hold of this breakout, the upside target is 1279. While NVO keeps suffering on drug costs, NVO does not have U.S. manufacturing capacity. They can't manufacture here, which means they're subject to 100% tariffs on everything they import because of Trump's executive orders. That automatically doubles their costs compared to Lilly. Makes it tough. Makes it tough. GE. Starting to work on a Head and Shoulders here. Be careful. Where'd that go? Where'd that go? Where'd it go? This breaks down, even though that shoulder's like kind of nasty on that first one. I take it down to 250. Kratos, back to the roadmap line. Wolf. Yikes. I think people got that WOLF confused with WULF. Irene. Come back to the roadmap line. If we break on down, you know, that was kind of where I expected us to top out, actually. Kind of expecting this one to take a bigger spill down in here. And if things keep going, URNM, back to the roadmap line. Rio, so the breakout should push us on up to like 110. Somewhere in that zone. QCML. Nasty ring. Probably coming back to the roadmap line. Look for other things. Canada Goose. There's a lot of shakeup in the spirits market right now. A lot of overproduction. The younger generation doesn't drink. Problems. Coming up with the products to sell them. SQM probably going to retrace, but set for a bigger pop. Reddit. Uh-oh. Uh-oh. Put my alert down there. Reddit getting below that level right there sets us up for this drop. Filled the gap, and we can get the bigger drop there. So watch out on Reddit. VST might be embarking on the bigger drop. Let's see. Circle. There's the lower low. The devil was that? I don't remember what I put up there. Oh, it's a little piece of roadmap line. Finally started to draw. Finally has enough candles to draw a roadmap line. I was like, what the devil is that? It's like 1 day's worth of roadmap line. It's funny. And so the roadmap line all the way up here. Holy bananas. And this thing pushing lower. This thing may come down to the 40s before we find a bottom. If crypto keeps being soft, this could go substantially lower. It's not my favorite to see. Blush keeps pushing lower. CRDO, yikes. A lot of these, I don't see any bottom going. EMR probably going to come back down. URA. I am in that one. FCX probably going to retrace back to the 50s area and then push on higher. You know, we went a little higher than I expected. I expected this path over here where we'd stop at 57, but we went on up to like 67. So kind of raise all these up, probably retrace back down in the 50, you know, this zone. And then we can embark on the bigger pop up to the 80s. URA. That was a beautiful bounce. That high, that low. Didn't quite hit the 64, coming back down. 67 will be the next upside on that one. I have a few hundred shares on that one. CLP. Next resistance at 109. BitX, leverage Bitcoin, MP. Watch for this one. So that's a 3-wave move up. Next move down, put us right down in here on MP materials. Don't care about Trump or anything else. That's the potential path on MP. It can not follow that, possibly, but that's what it looks like. Let's check out AMD. Did we hit the lower low yet? Almost. Almost there. So I need to set the alert right there at the lower low. Sometimes I get lucky on those. Oracle dipping on off. Probably going to go down to 120. Wayfair never has what I need. It's back to the roadmap line. So I was kind of doing a big watermelon seed squeeze. Faked out. Rejected off that 618. We're at a support. If it can hold, break through that prior high, around 120, should be able to recover. But if we start breaking on down, we might come back down to the 50s. Retest this downtrend highs and see if that's going to hold. So nothing's clear on Wayfair. Setups, the only one I remember is Apple. Had a malfunction on my searching tool last night. Apple has this setup here, but it's not super spicy. 14 trades, 50.6. Not nearly as good as Amazon. Amazon's back to the roadmap line, though. This one might stop out. Might be a bummer. So, let's see. Reset. You see 24, 95, 36. Apple, on the other hand, back to 1980. 33 trades, 75.6. Loses more money than it makes. So be careful on that one. Ooh, Ethereum poking through. Poking into the $2,000 area. Nishikits no bueno. Let's kind of come on down. All right. Let's go check out my expectations for today. See if I can figure it out. Oh, look at that. Yesterday, we hung out so dang close on SPY. Stuff works. Let's see where we can get the gamma levels today. What is the options market telling us? Where are we going to hang out? Where are we going to move? What are we going to do? See if we can read the tea leaves and figure it out. This is very subjective. I've been watching the gamma charts for years. I have only had the heat map since mid-December. I found this bullflow.io. Links in the description if you want to get a piece of it. I get a little bit of cheese off of that if you subscribe to my link. Not much. It's because the subscription doesn't cost very much. So, but I would appreciate it if you used my link if you're gonna grab it. SPY. Dun, dun, dun. Big level for tomorrow, sitting at 680. Man, look, there is nothing on here. This is pretty bad. Oh, man, look at that level. That level 2. This thing could get away. So I'm going to go down to 670. And I don't see much on the upside for any reason for this to rally. So we're going to go 682. It's the $100 million level there. And down to 670. 6.7? Anyway. Yeah, 670. Already got it down there close. 670. Down there. And then on the upside, I said 682. Yeah, so we're pretty much capped in here. We started out positive. Now, far as the level goes, where do I expect us to kind of end up for the day? Where's the big level, the pin level? So for that, I use this button right here, levels. And if you're, if you get a bullflow.io, which tab I'm on this Gex dashboard right here. And I look at the heat map, it kind of shows me what I call the bubble is where the big levels are in here. And there's not really a very firm bubble. It's all bright red in here. So that's very difficult to, I'm used to seeing like 300, 400, 500 million levels clumped up. And the blue level is the biggest level on the board. So right now there's not much bubble. It's just a big smattering of downside potential. Makes it dangerous. But then I go check out the levels. This is where it takes a little more subjectiveness. And this is more like what I've been used to seeing for years on gamma levels. You've got these big put players sitting here at 680, 675, 670. Those are those big levels out to this Friday. And this Friday is the biggest expiration. Today, much smaller compared to tomorrow. So this thing may hang out, and there's not hardly any call players at all here. So we may hang out right in this 680. And we may even push down to 678. And just get all the call buyers out. 678, that's what I'm going to go with right now. So 678, even if we dip below it, we may come back up to it by the close. It's a very subjective thing here. This is just kind of more art than science. This is just me watching these kind of charts for years and the close. When you balance kind of the calls with the puts and the exposure, that's kind of like the level. That's how I get the level. So right in there, I feel like the yellow kind of balances out the purple a little bit. Purple makes money when price goes down. Yellow makes money when price goes up. And that's kind of the way it works. Now, we also have a very large level out here that's shown in these levels. So this is, that's the main monthly expiration coming up on the 20th. Not next Friday, but the Friday after that. So those are in here too. And that's, $5.2 billion worth of put gamma hanging out there. But somewhere around that 678. So it's difficult to, you can't just look at today's expiration and kind of pinpoint it. And that's what makes this extra difficult, is if you could, it would be a lot easier to figure out where the pin's going to be, I feel like. But that's not the way the tool works yet. So that's what we use the heat map for. And kind of pick out the big level here. And that $1 billion level is going to let it go, and we're going to get down. This is going to be the $1 billion level for long. 675 for tomorrow. And then we may push it on down to that 670. Whew, downside. Glad I bought some VIX yesterday. All right. That's the SPY. Save it. Ooh, Palantir. Not surprised. We corrected. look at my note to myself. Oh, man. Let me see. Where's this? I wrote a note to myself. Look at this. Not surprised that we corrected Palantir crossing 130. That's the note I wrote to myself. Oh, man. God love it. All right. QQQ. So where we at? Oh, look at that yesterday. Holy shnikes. Look at that. I got that mofo right. Oh, that's the purple level. I was like, that stopped right on the fib level. It was right in the bubbles what it stopped in. All right. We're down here. Down here. And remove that level because that bubble we hit. All right. QQQ. How do we do it? So you start out by hitting the S button for search. Type in QQQ. Oh, 3Q is not 4. That's not going to work. Invesco, QQQ. The big gamma levels up there. Yikes. We're Yeah, there's no big levels. Sheesh. There's nothing. This is gonna be pretty rough. Yikes, man. This Q's can let it go. They got nothing. Probably gonna hold it at 600, right in the 600 area, but already down here. There's just nothing besides that 600 level. 591 is the next one down, so. I was gonna do it the same way I did the SPY, kind of. Wow, the calls are devoid down here. Let's go 595, I guess. 595. Now this can just get going and not come back, so be careful. We're gonna go with 595. As far as the bubble goes, there's no bubble. That's the problem. There's no big levels at all. We got 600 and the rope can just go 590 maybe. That's our big levels out here for the monthly. 580 right there. So this, let's just go with 590 for today. I'm not sure we're gonna get below 590 today, but we might. And the upside, I don't see much above 600, so that's probably the zone we play in from now till the close. Yeah, but it could, if things get spicy to the downside, we could be down at 580 pretty easy. So extension down here. And that's what I see on the gamma levels for today. As far as price action goes, we already kind of covered that a little bit. You know, we're already on Qs. I mentioned that if we get that extension, could be down here. 566. This is where the big ABC plays out. We're talking about starting out over here being the 0 point. First move down being A. The retrace being B. And then C playing out down here. So that's the big potential correction. Probably, look at that, the 580 level coming in right at that prior low. And then 566 down here. I don't think we're going to just let the rope go today. We'll probably find some support in here. But that's what we got. And then NASDAQ, NDX. Oop, don't spill the drink. Yeah, we got support down to 24.2. Then if we get below 24.2, this thing can let go of the rope and get a little crazier. Now that low from back here, sitting at 23.8. There's your NASDAQ levels. S&P levels. That's a long way down to the 6,600 as the kind of the top there. So S&P is lagging. There's the talking about 6,500 for the low back here. Talking about 6,650 for the top of the roadmap line and 6,600 for the bottom of the roadmap line. And so S&P could take a bigger bath. Could be the outperformer on the downside here. Be careful. That could we could lose 300 points off of that. And it could catch up with NASDAQ. Setting up for a bigger correction, looks like, everybody. That's not always my favorite news, but that's what we got. Be careful out there. We'll, yeah. I guess I'll be back tomorrow. I'll be on Market Masters 11:30, so come hang out. Otherwise, I'll see you in the morning. Same bad time, same bad channel, 9:15. We'll hunt for opportunity. And